Alright, what's good, y'all? It's your boys on. I'm back with another video. Now look, in this video I want to show y'all how I identify the higher time frame like direction, just so y'all can start understanding like where the market going before y'all start trying to look to scalp the market. Because that's basically what our trading style is. We get on the charts, we scout intraday and try to catch a trade, get out by the same day. But what I'm gonna show you is how to identify which way the market going so you can know which way you should be scalping. But before we get into this video, man, I want y'all to go ahead and drop a like on the video, subscribe to the channel if you're new, and also if y'all interested in purchasing signals on my course, everything is down in the description down below. Also, my broker that I use, Hanko Trade, they gonna be in the description down below for anybody that need a broker with low spreads and fast withdrawals and good leverage. Check them out in the description down below. But let's get into the video right quick. So usually when I'm trying to find the direction of the market on the higher time frame, I just look at what the market's showing me. Like, I don't really need the trend lines to see like if it's making higher lows and lower highs and all that. I really just will use like a box and see a structure getting broken, and you know what I'm saying, the market following that structure. So from right here, I look at this and okay, on the H4 we broke structure to the upside, came all the way back down here, respected this level, ended up breaking structure again right here, right? We broke structure again right here, ended up holding this level, made a new high, right? We ended up making a new high right here. Price broke above, came back for a little retest, held this level, and then we got another high right here, right, that got broken. And price ended up coming down a little bit to this level, but it still respected it close enough and came back up. So now, why is the market pushing up this way? It's literally one reason. We got a price gap on the H4. If you look at this candle over here, when price ended up breaking structure, right, and coming down, look at the candle to the left hand side and look at the candle to the right hand side. These two candles do not line up, right? So that means we got a price gap from here to down here, which need to be filled. So when you see the market has been pushing up this whole entire time, it's because they trying to come up here and fill this price gap. Now once they fill this price gap, I'm expecting for price to sell off and come back down, because we still got liquidity toward the downside that haven't been taken yet. Even if you look at this 4-hour candle right here, when structure got broken up here, we left this price gap from here to here, right? And price never came back down here, so eventually they're gonna work their way all the way back down to 1.1800 and fill this price gap. So for now, you should not be looking to do nothing but buy. Now the market could do whatever it want. It's 100%, it's a chance that it could 100% just drop from right here and never even go up there and fill the gap. But the way we trade, we trying to predict what the market makers is gonna do. So we just gonna do what we think they gonna do, and we not gonna try to trade like retail. So we only looking for buys until they fill this gap. Now let me show you how I would look for scalps and stuff like that. So the other day I had ended up sending out a signal, right? Around like right here. I sent out a signal at 1.15500. It was a long position. Let me show you. All right. We had this long position right here, 1.15500. Our stop loss was at 1.15300. Our TP was at 1.16100. Right? Now let's use the replay feature right quick. We're gonna go back a little bit to right here. Now, before we even look at the trade, let me show you why I even took that trade. We looking at the charts, right? As you can see, right here at this level right here, we got a bunch of liquidity that was sitting right here at this level, basically like a triple bottom. Now what happened when they got triple bottoms in the market? Bro, they gonna come down there and take that out. That's liquidity that the market gonna grab. So what did they end up doing? They did a stop hump. You're not gonna wait for price to come down here and buy off a support. I don't like that way you're trading. So if you trade that type of way, or you learn it from me, I'm gonna tell you to not do that. We gonna go against the liquidity, right? We want them to come down here, stop those people out, and then we gonna look for us an opportunity. Now we're not trying to catch the lowest point of that stop hump. We gotta still follow structure, right? And see if price gonna actually give us that type of trade. So let's come back over here. Price ended up making this low, right? Let's go over here to the 5-minute and let's see what happened. We now got this high that price formed, right? After it broke structure, did that old stop hunt. We came up here and made this high. Price ended up making another low, right? Now let's click play. We're gonna look and see what happened. Price made this low. Remember this high? We want them to come up there and take that out. They took the high out now, right? Okay. What are we now looking for them to do since they just broke structure to the upside? Now what we want them to do is we want to see if it's a price gap on the 5-minute. We got a price gap right here. From here to here. So now we're going to wait for price to push back down into here. And for this trade, since it wasn't the cleanest because it was happening around news events, as you can see this wick right here, I wanted to wait for price to reject that gap before I just pulled it. Usually when it's a lot cleaner move, I'll pull it as soon as it get into the box and put my stop loss at the low, right? But this was a 30 pip stop and I didn't want to have a 30 pip stop, so I waited to see if price was actually going to reject it just because of the way the candles was moving. Let's look and see what happened. Price ended up pushing down into the gap, right? I didn't take this initial entry right here just because, like I said, I wanted to see what they was going to do first. They end up pushing down a little bit more, and then they gave us this bullish sign right here. Right, once we got this rejection right here and we failed to break that low, I knew he was going up. So we get into the trade after this bullish candle close right here. 1.15500. We put our stop loss below this low, 20 pips, because I'm only trying to risk 10 and 20 pips on every setup, never nothing more. 20 pip stop loss, it lined up. 60 pip take profit. Now let's see if this trade played out. I might have did a video on this setup already, but I'm just showing y'all how I would use this to correlate with the 4-hour and the 1-hour to try to trade towards those price gaps or that price liquidity. So as you can see, price had just went straight up after we got in. And then look, if you missed that initial entry, guess what? This is where confluences come into play. We had this gap play, right? You might have missed this one. Now what can you do? If you missed that trade and you see that we broke structure again, we had this high right here, we broke structure and closed above it. Now what can you do? You could take you a Fibonacci, draw from here to here, and now guess what? Let's see where price pushed down to. It pushed right down into the 70 on the fib. A little bit below the 61.8 was the 70. We pushed right into the 70 on the fib. Could have took this trade as soon as this bullish candle closed right here. As soon as this candle closed, take the trade, put your stop loss here or either a little bit down just to give your trade some breathing room. And then this fib play end up pushing up too. So it's always a way you can get into the market when you're trying to follow the trend. And if you actually got the direction of the market right, we knew they gonna go up there and fill that gap. So we just gonna continue to ride trades to that gap. Structure might get broken toward the downside on the smaller time frames. You don't base the overall market trend on a 5-minute time frame. I teach y'all to only use that time frame to enter trades. I even enter trades on the 1-minute chart, right? But I would never ever determine the direction of the market based off the 5-minute and the 1-minute. But as you can see, price just got, I'll take profit just got hit, 60 pips in the bag, really no drawdown on neither one of these entries. So that's how I use the 4-hour to find the direction of the market, and then I use the lower time frame to catch me a scalp trade, to catch me some pips towards that way. I'm not gonna hold these trades all the way to the gap because there's no point. I don't need all them pips in a day. I'm cool with 30, 60 pips in a day. I'm cool. If I can catch a 100 pip trade, that's cool too. But that's usually gonna be a runner, not my main entry. But hopefully y'all enjoyed this video and y'all learned something. I'm trying to bring y'all some different type videos just so y'all could start understanding like my psychology and how I'm doing this stuff. But yeah, I'm gonna see y'all in my next video. Peace.